Good afternoon, everyone. It is my honor to share with you some facts, thoughts, and ideas that could be of help or of assistance, especially to startups or entrepreneurs when it comes to looking for possible sources of funds and the proper way of managing these funds. I prepared a presentation and let me share this presentation first. All right. Let me begin with a sharing of what Dr. Dave Marshall, the project leader of Synergy TBI, have said in one of his previous presentations. He said, innovation is a change that unlocks new value. It is the value of replacing we wish with we will and learning that it's not about ideas but empowering ideas. 2 weeks ago, Dr. Alcano emphasized on creativity, having a creative mind, having the idea, the passion, and the desire. Last week, Professor Yao talked about some tools and techniques and how an entrepreneur or a startup can make use of the technology to support the idea in mind. Further, Robert Kiyosaki, who is the author of The Rich Dad Poor Dad, the founder of the Rich Dad Company, said, making more money will not solve your problems if cash flow management is your problem. Basically, this is the entire idea of my presentation, which is divided into three parts. The first would be on the discussion on what are the components of the initial capital requirement. Second part talks about the possible sources of funds available for startups, and the third outline discusses on the tips to manage the finances. Components of initial capital requirements. These are costs and expenses incurred in the ideation, incubation, and acceleration stages. These are costs and expenses expended on the development of prototype or samples. These are product costs that would include raw materials, direct labor, and manufacturing overhead. Manufacturing overhead here include all those indirect materials and labor, the utilities, depreciation that pertains to the product. Initial capital requirement also include the acquisition of machineries and equipment, and also maybe the construction of a space, a working space, or a rental of a space. It shall also include training costs, teaching costs, travel expenses, freight and handling fees, especially if the raw materials as well as the machinery and equipment are being purchased outside. Initial capital requirements shall also include the paperworks, permits and licenses and other documentation that should be processed in the initial stage of the business. If you're going to sum all of this, this requires a big amount of money. So at the back of the mind of the startup or the entrepreneur, there is a question. What is the possible source of this initial funding? Where do we get these funds? I have determined or identified 5 possible sources of funds, of which I presented it according to its doability or according to how are we going to source this out. Now, how easy are we going to access these sources? The first one, funds comes from family and friends. Funds may comes from immediate family, from close friends, or from social network. The practice nowadays is the crowdfunding. Crowdfunding is a form of crowdsourcing and alternative finance. This is a process wherein small amounts of money are taken or requested from large number of people. This small amount of money will be combined and then will be used to start up the business. This is the most doable coming from immediate family or from friends. If they are interested with the business, if they are interested initially on the concept, then they are more than willing to invest in your business. The second possible source would be coming from the government. 2019, the Innovative Startup Act was signed into law, of which the objective is to strengthen, promote, develop an innovative and entrepreneurial ecosystem and culture in the Philippines. This law supports two programs, the Startup Grant Fund and the Startup Venture Fund. This program is spearheaded by the three government agencies, the Department of Science and Technology, the Department of Information and Communication Technology, and the Department of Trade and Industry. Few years ago, I had the opportunity to assist small and medium enterprises in their processing of DOST funding. And fortunately, they were able to get the funds coming from the Department of Science and Technology. So this is the second doable possible source of funds, of which a startup or an entrepreneur can go to these agencies and present the plan, present the concept, present the prototype, and if it is in accordance with the research agenda of the government, then fundings could be released. I've mentioned about research agenda. What are the research agenda of the government, especially nowadays that we are in this global pandemic? Businesses or research such as or in relation to food and agriculture, that's one of the major research agenda of the government. Another one would be maybe it is related to healthcare. That's the second. It's the most let's say, important. No? It's the focus of the government nowadays. Could be on Internet of Things, could be on biotech, could be on hardware, and so on and so forth. If the business concept, if the startup, the business is in relation to this research agenda or the focus of the government, of course, I don't think so. These three government agencies would not give you the necessary funding. The next one, the third, would be angel investors. Who are these angel investors? These are the high net worth individuals who are more than willing to provide financial backup or financial assistance for startups or entrepreneurs. Of course, this is in exchange for ownership equity in the company. They may invest one time or they may continue investing, injecting, infusing financial support so that the business shall carry its operations on the early stage of the operation. Of course, angel investors are also more interested in the business if the business or the concept for the incoming startups, the concept would align to what are the research agenda of the government as well as of private companies and what are its focus. Angel investors here in the Philippines, the best known angel investors include Kickstart. It also includes Idea Space, which is under the MVP conglomerate, which also houses Meralco, Smart or PLDT. Then there is Atnara VC and some private investors. One of the criteria that angel investors are looking up or the criteria that they're going to evaluate is the strength of the team or the strength of the startup. How strong that team, the management, let's say, or the team that composes the startup, or how strong is the entrepreneur. That's one of the criteria. Another criteria that angel investors are looking up to is how the team or the startup would manage the funds wisely. Later, I will be talking about accountability, transparency, trust and confidence. Trust and confidence from angel investors or from capitalists is a very important factor in order for the startup or the entrepreneur to be able to get the necessary assistance or funding. The fourth possible source would be coming from venture capitalists. This is composed of well-off investors, investment banks, and any other financial institutions. Of course, they're going to invest if the business is proven to be with high growth potential. And of course, these venture capitalists will invest if they have, in exchange for equity, there is what we call the risk-return trade-off. There are some capitalists, regardless of the risk, would invest because there is an assurance of high return in the future. So it is going to be established if the business has high growth potential, more venture capitalists would be willing to invest in the business. What are those known venture capitalists here in the Philippines? Artisan, CLFG, Core Capital. What's familiar to me is the First Asia Venture Capital, the Investment and Capital Corporation in the Philippines, the Nara Ventures. These are the known venture capitalists in the Philippines. The last but not the least of which I have included as one source of possible funds would be private placement. This is already the highest level, I think so, because in private placement, the business or the startup shall issue shares of stocks or bonds to pre-selected investors or institutions in order to source out additional funds. So this is already in the form of stock shares or bonds. I said it is already on the higher level because it is the startup or it is the business now who's going to issue shares of stocks, that's equity, or issue bonds, and that is borrowing, okay, borrowed money from investors, from pre-selected investors. It does not pass through the primary market or on the process of initial public offering. In terms of regulation, this private placement requires a few regulatory requirements compared to if the shares of stocks or bonds are going to be issued in the primary market and traded in the secondary market. Those are the 5 possible sources. 1 comes from family and friends. 2nd, from government funding. 3rd, from angel investors, individuals who would like to invest in a business, from venture capitalists, and to the private placement. With these possible sources of funds, maybe the question would be, how are we going to get access to these sources of funds? I have here suggestions, and I'd like to summarize this into 2 only: pitching and expanding network and linkages. Pitching, as much as possible, is also marketing or selling the idea to possible investors. Joining in hackathons and other avenue wherein the team, the startup, or the entrepreneur can present the concept, present the prototype. It is a good avenue to access these sources of funds. Pitching would open the gates of access for seed funding, for workspace, for coaching, and networking. The second advice that I could give is expanding networking and linkages. Be involved, be participative. There are, as I've said, hackathons. There are activities that are conducted by impact hubs, TBIs, accelerators, and also by government agencies, the one that I've mentioned, the DOST, the ICT, and the DTI. Participation of startups and entrepreneurs is highly necessary or advised because it is the way wherein you can establish connections, you can have resources, you will be able to gain insights, knowledge, and talent, and you can have the financial investments. I'd like to mention here Cubo. Cubo is a platform that supports Filipino startups, connects and develops the local startup ecosystem, forward tech and innovation. They also provide startups with access to capital, resources, information, and of course, expertise. In Silliman, we have this financial support coming from Dr. Mariano Lau, ICI. Silliman gives financial support for startups or entrepreneur, of which, of course, if this business or the concept is going to pass the evaluation, you will be receiving a support of 100,000. In addition to the financial support, you have a free access to the space of Dr. Mariano and Lina Lau Activity Center. You can also use the Oitingso Foundation Computer Center, other spaces like engineering labs, the Arduino labs, computer labs, the research centers in the university, and soon to rise would be the Bravo Technopreneur Park. These are some of the spaces available for startups or entrepreneur who would like to make use of this one as part of the support of SUTBI. Let me now proceed to the third part of the outline, which would be on the tips to properly manage the sources of funds. Granting that there are already, or the startup or the entrepreneur already received the necessary funding, how are you going to manage these funds? First and foremost, I would like to emphasize the separation of what is business transaction as against that of personal transaction. This is in accordance with the business entity theory. There should be a separation between the business account or business transaction from the personal account or personal transaction, that is to improve check and balance. There is a proper dealing of transactions which would promote financial health. The second suggestion or recommendation that I could give is a startup or an entrepreneur should establish financial goals. It should be a well-defined financial goals, reachable and measurable. It will set the direction of the business. And this one, whenever you're going to secure financial assistance or funds from angel capitalists, from ventures, or from government funding, you are asked to prepare what would be your financial goals. This is also, again, to determine the future direction of the company. This would determine what would be the ROI or the return on investment if ever there is one investor who would like to invest in the business. Break even has to be determined in order to determine or to identify when does the company would meet its fixed cost, in particular, the fixed cost. In order to, in excess of that, the company would be able to determine the profit. The third that I could give as a recommendation is to set a forecast or a budget. Again, this is also a necessary report to be submitted if one wishes to secure funding from the government or maybe from angel investors. They're going to look at what is the forecast of the company. This would determine, again, the clear direction for the future. Budgets are indicated and budgets should be followed. It shall contain all the possible costs and expenses as well as revenue forecasts, but then this should be followed. It should be followed. Forecast or budget versus actual is also one way of monitoring. Comparing the forecast or the budget as against the actual, the company or let's say the team will be able to assess the variances. The fourth one, this one, is being mentioned by Robert Kiyosaki as to the management of cash flows. Regardless if you have the money, but then if you don't know how to manage the cash flows, if you don't know how to manage the funds, then everything will be put into a waste. You will still be experiencing lack of money, running out of money, and probably if it will continue, you have your liquidity problems, so it will lead to insolvency and then to bankruptcy. So management of cash flows is the management of the in and the out of money. It shall support the three types of activities, the operating, the investing, and the financing activities. The fifth recommendation is to track and monitor all spending. Put everything into writing. Tracking and monitoring the spending is very vital, is very important for the success of the business. Aside from there is what we call audit trail. It is but important that everything, as long as all these expenses are official expenses, it shall be monitored, it shall be recorded, it should be filed. The preparation of an income statement. This one is also one way to manage the funds. Because when we have this report, the income statement, we will be able to determine how much revenue that came in, what are those expenses, and such we can compute already if the company has a profit or a loss. This is a very important financial statement. This should be communicated to the stakeholders of the company or the business. The seventh one is hiring the right people. Hiring talented, reliable, high-performing people can take the business to the next level. This is true. Success or failure of any business depends greatly on the people or depends greatly on its human resource. This would measure the efficiency and the effectiveness of the management team. And this is one aspect that is also being evaluated by investors or prospective investors. Then we have maintaining accurate records. This would support on the tracking of spending or the tracking of expenses. All of those records should be maintained properly. All the necessary evidences, documents should be kept on file. All accounting, bookkeeping transactions should be recorded on time and should be accurate in order to generate a reliable and a valid, timely financial information. All records should be kept intact. This is also one advice that I could give, especially like for example, at this time that we are in global pandemic, if we have no reserve funds for lean times, for emergencies, it would be very difficult for the company or for the business to survive. It is said here that at least 3 months worth of expenses should be part of the contingency account or on the reserve fund. And this is a necessary fund reserve fund. Again, intended for lean times, for emergencies, and of course, the business has to be insured to be protected. Acquisition of an insurance policy is also an important part or activity that the business has to get or has to engage, has to take. Excess cash shall be also reinvested properly. Lastly, as I've mentioned, I will talk about accountability and transparency. In business, accountability is an assurance that an individual or the business will be evaluated on their performance related to something for which they are responsible. It means the management team, the startup or the entrepreneur should be always answerable to all organizations or the business stakeholders, the suppliers, the creditors, the government, the customers, for all the actions that the business has taken, and also would answer especially on the results, on the performance. That is accountability. Transparency means the full, accurate, and timely disclosure of information. So this all boils down to trust and confidence. If the business or the startup or the entrepreneur practice accountability and transparency, practice these qualities, of course, this would lead to trust and confidence. More and more investors are going to invest in the business because the team, the startup or the entrepreneur is, what do we mean this one, is practicing accountability and transparency. They are promoting transparency and accountability. So more and more investors would come in, would invest in the business because of they have instilled, they have identified already that this is a trusted business. So these qualities are very important. Accountability, transparency, honesty, in order to build the trust and confidence between the business owner and the investors. There we can say that there is that partnership. All right. I hope I was able to give insights, especially to startups or entrepreneurs, as to the possible sources of funds, and if funds are already available, how are we going to invest, how are we going to manage these funds. If there are questions or clarification, I would like to answer them as much as I can. And again, thank you for listening. And I hope you learned something out from this presentation. Thank you very much, and God bless everyone.